Hey everybody, my name is Justin. Thank you so much for joining me today. Hopefully you're having a good day so far. Today I want to do a review on Paul's portfolio from Everything Money. So from what I can tell, he has several different positions in his portfolio. So we're going to go through each one of those positions. I'm going to give you guys my personal take on each one of those companies. Then I'm going to do an intrinsic valuation on each one of those, determine if there's any kind of margin of safety there from my perspective. And you get some value out of this video, please smash that thumbs up button. Really helps out the channel a lot, and I personally appreciate it. So let's just jump right into this. And I got to say, so he has 8 positions from what I can tell. He did a recent video where he talked about his positions, but then he's done other videos where he said he's bought a certain stock. So I kind of compiled all that together. If I'm missing any of the stocks that you guys know that he owns, throw it down in the comment section. I know I think he did a short on the NASDAQ 100, which is not on this list. This is just pure stocks, pure equities that he owns. So let's show the companies, and then we're going to go through an intrinsic value calculation on each one of these. So here is the list. We have Walgreens Boots Alliance, ticker symbol WBA. Second one is Intel, INTC, Alibaba, ticker symbol BABA. Meta, ticker symbol FB. Sleep Number, ticker symbol SNBR. Next one is Smith & Wesson Brands, SWBI. Steelcase, which is SCS. And then Millerknoll, which is MLKN. Let's take a look at their market caps real quick. So for the most part, they're decent sized companies. It looks like they're around 50 billion or bigger as far as market cap goes. He does have a couple of small ones. So Sleep Number around 1 billion market cap, Steelcase and Millerknoll around 1 to 2 billion. So those are kind of smaller ones. I know he said in other videos he likes to invest in companies that are at least $1 billion market cap, because then you could go and do some options on those option tradings, like put options, for example. And I think he sells put options to kind of collect some premium. And then if it drops below that price, whatever he has that strike price, then he can buy those at that predetermined price there. Now, if we take a look at the PE ratios, this was pretty interesting. A lot of these are pretty small. So Walgreens only a 6 PE, Intel a 10, Alibaba 31. So this is not a normalized PE. I've done multiple videos on Alibaba talking about their PE. Their normalized PE is more like a 14 or 15. The reason why it's showing a 31, and if you go to any site, it's going to say that. But the reason why it's so high is they have a lot of one-time adjustments on their P&L. So if you remove those one-time adjustments that are most likely not going to incur in the future, then it's going to drop it down to about half of what it is. Meta, 16, that's really low for that company. Sleep Number, 8, really low. Smith & Wesson's 3, which is really low. And then this was astronomically high, but we'll kind of talk about what's kind of going on with these two last companies here, because they're in the same industry from what I can tell. So let's first start with Walgreens Boots Alliance, and let's go over to ticker terminal real quick. And take a look at that. So currently the stock price is at $43. And keep in mind, I don't know when they bought the stock. So I'm assuming it wasn't at 43. I think it was probably when it crashed around 35. So keep that in mind as we kind of go through this a little bit. But you can see over the last year, it's down 20%. Over the last 3 years, it's down 26%. And like I mentioned before, this website that we're looking here is Ticker Terminal. If you're interested in this website, I do an affiliate link down below. They have a free version and a pay version. But even the free version, it gets you more data than any other website that I have found out there. Now, if we go down to estimates right here, we can see what analysts think this company is going to do in the future. And what you're seeing here is the pay version. So you get 5 years worth of analyst estimates, and the free version you get 2. So they think top line growth is only going to be about 2%. So pretty flat up top. Earnings per share growth is going to be around 16%. So that is fairly good. Walgreens, I assume most people know what that is. Similar to like a CVS, they have a lot of small retail shops that sell all kinds of goods from candy to toiletries to foot, ear care. They have one of their biggest business within that company is their pharmacy itself, and they took a huge hit during the pandemic. So they went from $60 a share all the way down to around 35, 36. So I'm assuming that's kind of when Paul bought was down in this range. Now, if we go and take a look at maybe intrinsic value calculation, let's do that now. All right. So what I did is I projected out their free cash flow over the next 10 years. So I'm saying about a 4% growth for free cash flow, 1 to 3 years out, 3%, 4 to 6 years out, 1.5%, 7 to 10 years out. I'm assuming actually in all these valuations that I'm going to do is a terminal value of 16, so essentially like a 16 PE. You can have debate whether that's correct or not. I'm using 16 because that is the market average overall for the entire market historically. So I'm just trying to be conservative in that standpoint there. So really only going from about 4.1 billion free cash flow up to about 5.2 billion. So based on, I could the intrinsic share price of around $61, for this company. So that looks like even at today's price looks pretty good. So that's a margin of safety of around 23%. And let's say he bought the stock around 35, he would have bought around a 43% margin of safety based on what I think the company's worth. Who knows what Paul's valuation, maybe he says this company's worth $100 a share. I have no idea. But this is just how I'm personally looking at it. So next up is Intel, ticker symbol INTC. This is one that I've talked on my channel numerous times. Really like the management there. And these first two companies I've talked about, I do not own myself. I do not own Walgreens, and I do not own Intel at this time. Intel's down about 24% over the last year, down about 6% over the last 3 years. If we look at a 10-year chart, so they've been up almost 80%, which is only a 6% CAGR, which is not very good. But if we look at analyst estimates here, so analyst estimates over the next 5 years, they think they're only going to grow top line growth around 7%, EPS around 4%, so not a whole lot of growth at all. And, analysts certainly are not always right by any means, so it's always good to kind of do your analysis of that. I know for me personally, I like management, like I said about Intel, but, the thing that concerns me is AMD, and I just don't know how they're going to create a strong enough moat to fend off some of these other competitors there. So if we go over and take a look at a valuation for Intel real quick, let's do that now. So I think Intel is going to grow about 7.5%, and this is free cash flow 1 to 3 years out, then drop down to 6.5%, 4 to 6 years out, and then 5.5%, 7 to 10 years out. So based on information, I think it's going to grow. And keep in mind, I'm using a base of $15 billion for free cash flow. If you go look at their free cash flow right now, I think it's around like 8 or 9 billion, but I would argue it's about really double that as far as their normalized free cash flow. I mean, you look at a year, even two previously, they were almost at 20 billion. They're putting a lot of money back into the company, which is diminishing their free cash flow. A lot of capital expenditures and things like that. So I think 15 billion is more of a good base for them. So I think it's going to go around from 15 billion up to about 27 billion over the next 10 years. So based on that, I get about $65 intrinsic value for this company, which is also pretty solid, not fantastic, but pretty solid. So trading around $51 today, that's a 22% margin of safety. Again, I don't know what his buy price is, but today's price, I get around 22%. Now, if you think that the PE of the company, so right now Intel is trading around, I want to say like a 10 PE. Yeah, 10 PE, duh, right there. If you're going to say they're only going to be a 10 PE going out in the future, that totally changes the calculation. I don't think they'll be at a 10. If you look at historically, I mean, they've gone all the way up to 20, so plus 20 actually. But you say they're only worth 10, then that's $49. So what it's trading at today is what you're saying it should be worth. So obviously, trying to figure out what internal value or what the future P is extremely important in these type of calculations. Third one up is Alibaba, ticker symbol BABA. This is a company I do own. I'm very, very bullish on Alibaba. If you look at the position in my portfolio as far as the number of shares I own plus my put options I have on this company. It's my number one position in my portfolio. I'm very, very bullish on Alibaba. So if we go take a look at Alibaba real quick, and we get a 1-year chart down 51%, over the last 3 years down 37%. This company went public back in 2017. So if you about when it public and held today, you only have 5% return, which is pretty pitiful. But obviously a lot of stuff going on with Chinese stocks and Alibaba and everything going there. So I'm not going to go into all of that. There's plenty enough stuff on my channel and other people's channel to talk about that. Now, if we go into estimates for this company, analysts think over the next 5 years. So they think top line growth is going to be around 14%. Keep in mind, this company's been growing well above that. So what have they been historically? At least the last few years, they've grown 46% on the top line. So going down to 14% obviously is a significant decline. At least that's what analysts think is going to happen with the company. On an EPS perspective, I think it would be pretty much flat over the next 5 years. And also free cash flow flat as well. Now, one nice thing about ticker terminal, you can actually change back from the currency of the country, or you can go to USD, which other websites can't do. So we do that. So these numbers are more realistic than we were seeing before in Chinese yuan. Again, 14% on the top line. And with Alibaba specifically, I've talked about in other videos, I think the operating income is going to actually it's going to go up from 8.5% to about 13.5% over the next 5 years because of their cloud business. So again, very, very bullish on this company. Now, if we go take a look at intrinsic value for Alibaba, now I'm saying their free cash flow is going to grow 10% over the next 3 years, 12% 4 to 6 years out, 14% 7 to 10 years out. So everybody, again, is going to have their own opinion on this. They have been putting a lot of money back into the company because of capital expenditures around the cloud and other things they're trying to do within the company. But I'm probably more bullish than what analysts think about Alibaba because of their cloud. And, it is true that, Chinese economy isn't necessarily going into a recession, but it's going to be slowing down. But it still should be around 3 times GDP of what the United States growth is over the next several years overall. All right. So if we look at all that, I got the intrinsic value of around $253. And I think that is pretty conservative overall. And so if we take a look at that real quick, that is a margin of safety of 54%. So obviously that is really, really cheap based on today's price, but a lot of risk associated with that. So everybody has to figure out what the risk tolerance is there. So next up is Meta, also known as Facebook. And obviously they've been in the news a lot lately too. We've seen a big drop there. If we head over to ticker terminal real quick and do this, ticker symbol FB. And guys, if you like this type of content, if you like this type of video of me reviewing people's portfolios, drop it down in the comment section if you want me to do a video of somebody else's portfolio, and I just might do that. All right, so let's take a look at this real quick. So 1 year chart, they're down about 23%. 3 years, only up 35%. Over the last 5 years, 58%. So they've actually lagged the S&P 500 over the last 5 years because of this huge, massive pullback that we've seen lately. As far as estimates go for this company, analysts think the company is going to grow about 13% on the top line, which is significantly less than what they have been historically. So historically, they've been around 37% over the last 6 years. So huge drop, at least that's what analysts think are going to happen. Moving forward, it looks like EPS is going to grow on 10%, free cash flow 11%. But, keep in mind, this company is still a free cash flow machine from Instagram and also their Facebook platform, even though we're seeing some slow growth, especially in the Facebook, and even a slight decline as of the last quarter. They pushed like $12 billion in free cash flow. Obviously, they're pivoting to the metaverse. We'll see how that turns out. But they still should be able to grow, at least my opinion, 15% on the bottom line. If we take a look at intrinsic value of Facebook real quick. And I do own Facebook stock. I forgot to mention that. So I own Alibaba and Facebook myself. And so I think their free cash flow is around 9.5%, 1 to 3 years out, 12%, 4 to 6 years out, and then 10%, 7 to 10 years out. Again, keeping the terminal value of 16. So I come with an intrinsic share price around $395 for Facebook. So we take a look at that here. That's a 42% margin of safety based on today's price. All right. So next up is Sleep Number. So ironically, the first two companies I do not own. These three companies that Alibaba, Facebook, and Sleep Number I own. So go figure. If we take a look at Sleep Number real quick, now this is a company that makes beds, very well known in their space. I would say that they have a very, very loyal customer base. I think their warranty is something like 15 years or something like that. I mean, most bed companies tell you to replace it every 7 to 8 years, but Sleep Number makes such high quality material, such high quality products. They last much longer than others in their industry. All right, so let's take a look at them real quick. I've also seen a huge pullback on this stock. So since actually just year to date, you're talking 34% down. If you look at 1 year, they're down 65%. Over 3 years, they're up only 12%. So huge pullback. If we look at analyst estimates for this company over the next 5 years, they think they're going to grow about 5% on the top line, and their EPS is going to grow around 8%. So the big thing about Sleep Number is that they produce a lot of free cash flow, around $200 million, but they've been buying back a ton of shares. So if we look at actually historically real quick, this will give us a really good picture of what's been going on with the company. So their top line growth has been around 10%, whereas their earnings per share has grown 24% per year. So this is on a per year basis, is what CAGR means, compounded annual growth rate. So their EPS has grown about 2.5 times what the revenue is because they're buying back so many shares, which gives more value to shareholders because you own a bigger piece of the pie. All right, so if we go back and take a look at intrinsic value of Sleep Number real quick. All right, so for this one, I actually think they're going to decline their free cash flow. So a base around $225 million right now for free cash flow. However, I think with the whole pandemic that happened and a lot of people staying at home, had a lot of stimulus money, they were buying stuff for being at home since they weren't traveling. I think their beds were bought a lot during that time, so there was a huge influx of sales. And so I think it's going to decline, -2% over the 1 to 3 years, the -1, then -0.5. So again, it's going to go from around $225 million free cash flow in 10 years out. They're only going to be doing around $200 million. Based on that, I come with an intrinsic share price of $94. So even if they have a decline in free cash flow, I still think it looks like a very, very good value today. And just keep in mind, their P is around 8. Historically, they've been around like an 18 to 20. So just take that for what it's worth. So that's a 46% margin of safety based on today's stock price. All right. So next one up is Smith & Wesson. This is a firearms company. And if we go take a look at ticker terminal, this is a company that I also did a analysis on. I do not own them personally. This is a very cyclical company. And if we look at the last year, it's down about 12%. Over the last 3 years, it's up 65%, 18% CAGR. It's pretty good. Over 5 years, it's down 21%. So if we look at, actually, let's do a 10-year chart. So 10 years, you can really see it went from $8 up to almost 30, dropped down to 10, it came up here, got 25. Again, this is 10 years, so this is a long time, but you can see it's cyclical, ups and downs, ups and downs, and ups and downs. And for example, even recently, why it shot up, with the new president coming in, people were concerned maybe they would, get firearms taken away, or there'd be, regulations that were changed. So people went out and bought a lot of firearms. Plus, again, with the whole pandemic play, people staying at home, and not going and traveling, doing other things. So people were doing recreational stuff. And so this is kind of why the sales kind of went up, and why I said in other videos, in my stock analysis video, specifically in Smith & Wesson, I was not interested in them because I felt like they kind of hit that pink and they're kind of on the downward cycle at this point. Now, if we look at what analysts think this company is going to do, so this company, they only go out 3 years. It's a smaller company, so there must not be as many analysts that are covering it. They think actually the top line growth is going to drop about 3% overall. Net income is going to drop by about half. EPS is going to drop about half. So analysts also think this company is kind of on a decline at this point, but it could be something where you buy, and if it's a good value, look at the intrinsic value right now. But if you buy, maybe, if you're willing to hang on to it long enough, maybe some good things will come of it. All right. So I'm basically saying, their growth they're going to drop 40% in free cash flow. Again, I think they're on a down cycle right now. They had about $200 million in free cash flow, so I think it's going to drop significantly, be flat for about 4 to 6 years, and then 10% growth after that. Again, because that cyclical part of their business, right? So based on that, I come with an intrinsic value of around $18 for this company. All right, so if we take a look at where they're at now, you're talking about like 16% margin of safety. So I'm essentially saying where they're trading at right now is what they're worth at this time. So that's just kind of how I'm looking at it. Now the next two companies are interesting because they're kind of in the same space from what I remember. And I got to say, I don't know these companies very well. Steelcase and Millerknoll. And if we take a look at Steelcase real quick, your symbol SCS. I think they provide furniture material. Let's see. There we go. Manufacture and sells integrated furniture settings, user-centered technologies, and interior architectural products. The company's furniture portfolio includes panels, fence, beam, base, furniture systems, storage products, fixed and height adjustable desks, benches, tables. Interesting. So let's take a look at Millerknoll real quick, because I think they're basically in the same category. Manufacturer distributes interior furnishings worldwide. Also provides storage products, wood case goods. So, yeah. So and both these companies' scenarios, I don't really know much about as compared to the other companies that we just talked about. So Millerknoll, we'll look at real quick. They kind of think as far as analyst estimates go, they think they're going to grow around 15% on the top line. They think their EPS is going to grow from a 3 to about a 5, so almost double in the next 4 years, roughly, is what it looks like. So it looks like maybe Paul's looking at it saying, okay, maybe they're on the downward cycle now, and then we're going to kind of see an increase, because if we look at the stock price of Millerknoll specifically, and Steelcase, it was very similar to this. Over the last year, down 16%. Over the last 3 years, down 4.5%. So if we look at a 10-year chart, so actually they were going up and up, and a huge drop because of the pandemic, went up to about $50, and then it dropped. So interesting. Okay, so we look at Steelcase real quick. Ticker symbol SCS. Does theirs look the same way? Similar. It looks like Millerknoll actually kept going up and up and up, and then down and then up, where this was up and then down. It's been kind of flat. So Paul must be seeing something here. Maybe they're going to have an uptrend if we look at what analysts think for this company over the next few years. Top line growth around 7%. Looks like EPS is going to grow quite a bit, actually. When you get into these small companies, you just don't have as many analysts following it, so it's kind of hard. They only go out a couple of years. So EPS normalized, at least, is up 150% per year, which would be pretty much in line to EPS gap there. So interesting. So looks like a lot of growth, but I'll show you my intrinsic value. Again, I just don't know these companies as well, so take it for what it's worth. So Steelcase, I used a base of free cash around $50 million, and growing 18% per year over the next 3 years, 14% 4 to 6 years out, and then 8% 7 to 10 years out. So based on that, I come with an intrinsic value of $12, which is pretty much where it's trading today. Millerknoll, I'm saying 15% growth 1 to 3 years out, 8% 4 to 6 years out, and then 4% 7 to 10 years out. So I'm coming with an intrinsic value of $32 on that company. So if we take a look at both of those real quick. Oops. So I'm saying that they're trading around what I feel like their intrinsic value is. But again, I just don't know these companies. I just don't know the industry as well. So these are the 8 companies in his portfolio that I know of. If I'm missing any, drop it down below. I'd really appreciate it. Do you guys own any of these stocks yourself? For me, I own Alibaba, I own Meta, I own Sleep Number. I do not own Walgreens, Intel, Smith & Wesson, Steelcase, and Millerknoll. If there's another portfolio of maybe another YouTuber out there you'd like me to do analysis on, drop it down below. Thank you so much for watching. I really appreciate it. I'll catch you guys on the other side. Take care and God bless.